Hello and welcome to Crypto Weeklies. In this video, we analyze Arweave and its token AR. None of the content is financial advice. In this video, we'll be covering the machine learning based price forecast, regression analysis, estimated risk based models, the simple moving average based model, the regression based DCA model, and the time weighted average price model, and also some of the technical analysis and the indicators related to Arweave. None of the content is financial advice. It's all available for free under cryptoweeklies.com, the link on the bottom of your screen. So let's get started. Over the last 24 hours, Arweave has rallied by about 6.5%. You can check and it has rallied the most over the last 24 hours if you compare it to its peers. You can check this chart under indicators on cryptoweeklies.com heat map. This is the barometer view where how cryptos are looking with respect to each other. You can check the Arweave USD pair if you are interested, how it has been performing over the last key performance period. Again, over the last 24 hours, it's up the most. Over the last 7 days, it's down by about 5.5%. Over the last 30 days, it's down by about 21%. And over the last 90 days, I think it has down further quite a bit, about around 65%. So in terms of the technical levels, you can see right now the prices, although have rallied in the short term, they are nowhere close to its May 2024 high. Again, almost a 10x from the current price of about $5.31. Price in May was around $47 at one point. So if you look at the current price levels, again, the prices have cooled off quite a bit. The initial level of support was at around $6.30 again when we made the last video on Arweave, again a month or so ago. You can check over here if you on the YouTube channel. You can see the last video was over a month ago. We have covered Arweave throughout the course of the bear market. Again, potentially the bear market for Arweave is still intact. Again, you can see the prices are close to what they were back in early to mid 2023 till October 2023. Since then, most cryptos did rally in 2024. Although there was a rally in December 2024, Arweave did make a substantially lower high compared to the May 2024 peak. So again, a decline in that kind of market presence. Again, this you can corroborate this with the historical snapshot. Again, right now Arweave is ranked number 125th by CoinMarketCap's ranking by market cap. If we look at 1 year ago, again in instead of now in second week of April of 2025, let's roll the clock 1 year back and check how Arweave was doing, whether it was in top 100. Now it's ranked number 125. If you roll the clock 1 year ago, the market cap based rank was 53rd, and again market cap was at around 1.8 billion, slightly under over 1.8 billion. Now the market cap based rank is nowhere close, almost dropped by 2x. Now if you see Arweave over here, it's outside of top 100 cryptos by market cap. Again, you can see over here it's again this is not sorted by market cap, this is sorted by the price change. But if you toggle to the market cap view, you will find Arweave at around 100 and somewhere between 145th and 150th spot. 125th spot, sorry. So from a 53rd spot by market cap to 125th spot, it has dropped back quite a bit over the course of 1 year, and that is evidenced by the price chart as well. Again, if you look at a log scale or even at a linear scale, the price was much higher in May 2024, almost a 10x higher than the current price. You can see market cap growth, again a slightly different chart. That is because the tokenomics, although the price was higher in 2021, lesser or fewer number of tokens were in circulation, whereas in 2025 the market cap was higher than in 2021, but the prices were lower. That means back then the impact of token inflation was felt by the token holders, where the market cap grew but the price did not quite grow in that exact proportion. That means holders felt that the adoption was taking place, but the price did not reflect that market cap growth. Right now the tokenomics of Arweave are one of the really good ones. Again, you can see almost entire max supply is in circulation, 66 million of max supply, out of which 65.65 million is in circulation. In terms of percentage, that would be again, if you check over here, 99.47, almost 99.5% of the token supply is in circulation. So coming back to the technical levels, now that the initial level of support was breached at around $6.44, that level would potentially now turn into the resistance, if historical price action is any indication. If we are somewhere over here in June 2023, again, if the bottom occurs over here, there might be a rally back to this green area, the green line at around $6.48, and then again checks back, and again as the price comes close to the 20-week simple moving average and the 21-week exponential moving average, both of them are at around $11 and $11.87. So if and when the prices, again, as the slope of this descent is pretty phenomenal, so when and if the prices eventually bottom for Arweave, again, there is no guarantee, but looking at some of the historical price action, the major area of support first at around $5.32, close to the current price, $4.82, slightly below the current price, and then the secondary area of support at around $3.84. So those are the key levels to watch. If this 20-week and SMA and 21-week EMA kind of meet a similar price point that they did back in October 2023, around that $4.80 to $4.80 to $5.20 level, that could kickstart a rally for Arweave in the short term. Again, I know all of the assets in the crypto market are correlated, but again, some of the popular ones again do provide some insights. Especially you can check how this, once the rally kind of took off, there was again one back test of this 20-week simple moving average level, and then provided with some more bullish narrative, the price did essentially do a 5 to 6x from $8 level to about $50 level at one point. So since then, again, the next iteration of price and price getting corrected back to the 20-week moving average was not that bullish. You can see essentially then prices have stayed below the 20-week moving average. Again, there was one fake out back in December 2024. That is because all of the entire crypto asset class was rallying, but you can see as if there was individual token related weakness that still persists or reflects in the price action, where most of the cryptos that were rallying in May 2024 had a newer high in December 2024. I can give you an example of ETH or Solana, maybe preferably starting with ETH, because ETH did have some of the tougher time to rally, but still from May 2024 you can see 3,800 900 level to December at around $4,000 level. If you go to Sol chart, you can see May 2024 was around here at around $173, whereas December high was at around November December high was at around 260, and early January at around $300 for Sol. Whereas Arweave over here, you can see May high was at around $50, and July what at around $33, December at around $29. So series of lower highs and lower lows, potentially now getting closer to the bottom. Again, the angle of descent is kind of surprising, or not painting that good of a picture, where again one could argue we are somewhere over here between the drop of early 2022 April till June 2022, and what could follow is this counter trend rally back to the 21-week exponential moving and 20-week simple moving average. If that were the case, then even a rally to about 8 to $10 could be potentially on cards, as if the fractals were to play exactly like they did back in June 2022 till about August 2022. Prices back then were much higher than today. Again, even the bear market of 2022, prices for Arweave were much higher, at least till about July, August of 2022. The level that we were currently at, the prices were at that point in December 2022, which was the bottom for most of the good top 100 cryptos, which had some adoption at around November December time period of 2022. The prices for Arweave or NH token AR are much lower than this $6.50 level. Again, there was a crash below this price first in early to mid March, and then finally weekly closes towards the end of March of 2025. So where does the machine learning based price forecast for Arweave take the current downturn, and how it anticipates the weekly price action to be in the next 6 months if the downturn were to continue? Again, the level of angle of descent, again, if that were to continue, the major 6-month support is all the way per this model at around $1.52, again close to this $2 target. Again, if this downturn were to continue till about middle of August, then the prices could be between $2 and about $4.50. So that would correspond to prices falling to this area of major support. That is the bear case scenario. The base case is bottom really soon per this model, somewhere between $5.15 and the current price, which sideways to slightly higher highs and higher lows till about next 6 months, till peaking at around $6.30. That is, again, if the prices were to stay sideways, that is the providing the trend behind the price without any bullish or bearish price action. In the next 6 months, if there is a non-euphoria 1 standard deviation bull market, that means prices go up but do not have a euphoria like they did back in October till December 2023 or February 2024 till March 2024. In that non-euphoria peak for Arweave, the next 6 months price action could be between $6.42 and about $19. A $19 RV would be still lower than the 0.23 fib level from its previous all-time high at around November 2022 at around $89. So now looking at Arweave in a euphoria or a 2 standard deviation bull case, in that scenario this model says that there is still room for Arweave to go slightly higher than, at least at a weekly average level, higher than the 2024 May high. That 2 standard deviation peak for Arweave would be per this model at around $50, couple of cents here and there. That would be close to a midpoint between the 0.5 fib level and 0.618 fib level. The 0.618 fib level at around $56, sorry, or $57, to round it off, could be an eventual peak if the weekly average is at around $50. That week's candle could have a weekly candle high at around $57. Again, that's one way to interpret this machine learning based price forecast. What remains the key level to watch is if prices in the next 6 months follow this trajectory. Again, there are no guarantees, especially with machine learning based price forecast. What they look for is historical evidence using machine learning models such as seasonal ARIMA, LSTM and XGBoost to identify if the prices are likely to exhibit any bullishness or bearishness using past data and machine learning based interpretation of those, and and confidence level or probability theory based risk and reward at any given point. There is a 68% chance that the prices stay between $6.42 and $18.94 in the next 6 months if there was a bullish recovery. Similarly, the alternate possibility is between $2 and $4.50 if the market were to go ultra bearish. If on the other hand, again, the 95% case that again, and weekly ceilings are available in the tabular format also over at the bottom. So if you're interested in tabular view, so middle of May or end of May at around $15.70, that would be the 2 standard deviation or perfect V-shaped recovery with aggressively higher highs in the next 6 months. If that were to pan out, again, we are nowhere close to that Euphoria case, at least for Arweave at this point of time. What remains to see is if first this pink line or the base case pans out where there is a bottom in the short run, and in the moderate run, if the prices do eventually go to that $10 level, they could meet that 20-week simple moving and a 21-week exponential moving average at that level, per my interpretation. Again, not financial advice. Looking at the regression based fair value, that also comes close to that $9.30. Again, this pink line helps establish what is a non-linear fair value for Arweave using polynomial regression based valuation. The utility of this model is especially when you apply 1 standard deviation residual to this fair value. That green line helps identify again a great buy zone below this green line or price action when it is around this green line. Historically speaking, again, there is always a possibility that token goes to zero, but if that hypothesis is invalidated, DCAing below the green line, especially over a longer period of time for cryptos which have some adoption, is not the worst idea. Again, historical data supports that. Again, this is not financial advice. The green line support is at around $5.12. The price is slightly higher than the green line, but again, one could make the case that it's sufficiently close enough for considering a value zone for Arweave. The opposite of that is this yellow line, which is 1 standard deviation residual applied to the upside from as it relates to the fair value. That yellow line and the green line together, the price stays 68% of the time, or 1 standard deviation confidence level within this yellow line and the green line. The yellow line or the 1 standard deviation ceiling is at around $17, kind of close to that $19 target with the machine learning based price forecast at that level. The $16 Arweave AR token could be a midpoint between the 0.23 fib level and the 21-week exponential moving average. Now, if there are any further rallies in the market, again, the 2 standard deviation ceiling usually encapsulates the major rallies where the market is in a euphoria phase, like it was back in February 2024 and also in between September 2021 till about January 2022. If that kind of euphoria phase were to pan out, the price action per this model at this point could be somewhere between $17 and $30 for Arweave. From the current price, a $30 Arweave represents about a 6x move. If we were to go any further and analyze Arweave from a risk model based standpoint, let's continue with the DCA model, which takes into consideration the same polynomial regression function. Instead of applying to the weekly candles, it applies to the daily price and identifies the risk and reward based on the relationship between the price and the regression based fair value, and it's color coded between the warmer colors and the cooler colors. Again, the bottom regression line, a similar green line, helps identify value zone. Again, slightly more conservative iteration of that. And if the hypothesis with an altcoin such as Arweave is to only DCA whenever the risk levels are less than 20%, this model does identify some of the best times to DCA in the market cycle, especially looking at the historical data. Again, the hypothesis could be changed to only DCA when the risk is less than 10%, and again, that's where you eventually get your bottom. But as the risk levels are decremented from, let's say, 20% to 10%, there are no guarantees that all the bottoms will be captured. So the December 2022 bottom was not captured by this model because we went slightly more risk covers. Again, the 20% risk, if the cutoff is at 20% risk, that would have identified the December 2022 bottom. But again, one could make the counterpoint that the prices did eventually go that between the 10% and 20%, between the 0% and 10% risk. Right now the risk is at around 10% per this model. The $5 Arweave or AR token represents a 10% risk per this interpretation of the model. If we were to extrapolate and go to the other side and say where are the rallies and how do from a distribution phase or overvaluation phase, what is the risk level to watch for? Again, this 50 to 60% risk band represented is in this green color does eventually capture major rallies. Again, if you want to be slightly more conservative, between this 40% and 60%, that dark green and the light green color, usually most of the rallies, even if they eventually result in a lower high like they did back in December 2024, whenever this model says the risks are more than 40%, that is usually again, unless we are in a parabolic bull run, in midst of a parabolic bull run, that DCA out between 40% and 60% risk in step functions is definitely, historically speaking, not the worst idea. Again, if the prices were to go between that 40% and 60% risk, the price at that level could correspond to between $12.80 in terms of the Arweave token price and about $17.84. That $17.85 target is close to that regression based 1 standard deviation peak for Arweave. If we were to draw a peak regression dotted line where we could estimate, especially again if you are worried of a fake out in the shorter term, this dotted red line again does hold a significant weight. Right now it's currently at around $23.74. Again, there are major rallies which do cross this dotted red line by about 10 to 20%, but that is a major signal in terms of if the rally has no more gas in tank and again has more chance of cooling off than heating up. That level for Arweave comes at around $23.74. Again, a 10 to 20% increment on that could be somewhere at around $25 level. So that is one way to estimate what the price of Arweave could be. Last but not the least, we'll spend some time on the time weighted average price model. This model does identify a decent accumulation zone whenever the price is below this blue line. That blue line represents the time weighted average price. DCA below this blue line again throughout the course of the bear market between May 2022 till about February 2024, about 2 years. DCA with this model again was definitely not the worst idea if you had the plan to distribute some of it in May 2024. Right now the prices are significantly below the time weighted average price. Time weighted average price again coincides with the exact level at around $17.50, so 33 cents, slightly lower than the 1 standard deviation peak and the DCA based 40 to 60% target. Right now the prices are below the blue line. That means per this model again it's just a on-off flag. Per this model, this is an accumulation zone. Again, there are no guarantees that prices do go higher than the time weighted price at any point in future. There are many tokens where the prices across the multiple cycles never touch or rally beyond the time weighted average price. So again, that is one due diligence to make with any risk asset based investment. But again, looking at some of the historical levels, with the hypothesis that there is one more leg in the bull run, again that is when these kind of models come in handy. If the hypothesis is that there is no more wiggle room for any more rally in the bull run, again looking at this model standalone might not be of much of a help, rather than looking at this model, looking at a confluence of several models such as the DCA model, especially as it approaches this bottom regression line where the prices again could theoretically offer some support between $3.50. Again, prices usually bottom 10 to 20% higher than the dotted green line, so a $3.22 dotted green line. So adding a 10% increment that could take the eventual support between $3.50 and $3.80. And with that, like to conclude the video by saying most optimistic things at the end. If everything kind of lines up, the 2 standard deviation ceiling is at around $24, slightly higher than that, 10%, 20% higher than that at around $25. The first criteria to look for is if the prices break out this downturn, form a bottom somewhere at around $5 or $4.80, rally to this first area of resistance be above $6.50, and then face the challenge with the 20-week simple moving average. If there is a breakout at $24, takes the price if to the 0.3 Fibonacci level, those are the key levels to watch and key resistance to clear before looking at some of the other price forecast to the upside. And with that, I would like to conclude the video. Hope you enjoyed the content. If you did, please give us a like and subscribe, and hope to see you again tomorrow. Thank you and have a nice day. Bye bye.